Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, and we're now at the 11th of October, 2023. All right, my friends. Before I get into everything, something's been bugging me. I realize all the planning that went into the attack on Israel. I mean, it had to be years of planning, making sure the munitions were there and everything else. Why this date? And the only thing that comes to mind to me, and there's only one thing, we had Yom Kippur. They could have attacked on that day and exactly done it. And everybody said, oh, it's close to it. That's the anniversary. Nah, you could have done it on Yom Kippur. Then you've made a statement. I think they just picked this time frame because the U.S. and Saudi Arabia were probably behind the scenes getting very close to making a deal for Israel's acceptance by the Saudis in return for armaments and everything else. And I think somewhere along the line, Iran said, enough is enough. This is the moment. We've got our planning. It's the Jewish holiday. Those people we have to eliminate anyways. Let's go for it. I can't think of another reason why now. Does there have to be a reason why now? I doubt it, but that's my guess. We had today the PPI number come out, and how the market reacted to it is what you got to pay attention to. The headline number was not favorable. However, the equivalent of a core, which is ex-food and energy, was absolutely flat, and the market embraced that number. That's the way you look at it. Tomorrow, you're going to get the CPI number. We will see if we get the same type of reaction. Today, you had the FOMC minutes. Interesting. The Fed keeps talking. They wouldn't mind going up another point. They can see that if the conditions warrant it. That's the jargon. And do they warrant it? Well, in parts of the market, they're saying no. Your bonds aren't any longer in the 106, in the notes rather, 106 area, 107. They're 108. They have come back. You're falling there. Energy prices have been falling. In natural gas, you know that there's an event taking place between, I believe it's Finland and Estonia, where there's a gas line that was bombed. That was the expectation, along with the communications. If they can prove it's Russia, they have decided to make it then an attack on a NATO member. If they can prove that, it's very hard. Russia will say, what are you talking about? We're so innocent. You people just want to keep blaming us. I get that. Remember, they protected themselves. They didn't invade Ukraine. When we look at the metal markets, you look at the gold and the dollar. The dollar's come down and you're holding here in the 106 area. Now, I can see the gold having gotten itself into a rally stage here in short covering. I'm not convinced it's fresh, new long buying, and the market's ready for a move. We'll take a look now and see why. When you come and you look at the weekly chart, you're still underneath the 18-week average of closes. Getting a bounce, the way you always do, very typical. Why? They come out and they occur. That's what charting's about. There is a gap in the chart. I still think it will ultimately be filled, by the way. Gaps typically are. You show me where you have other ones as I step back here. So you play the odds. Does it have to be? No. If the market were to get some event overnight, and let's assume gold all of a sudden jumped, it can't do it now because you're already open, but just jumped away from all this, you can get what's called a gap, a breakaway, and an exhaustion. You can get three. That happens on chart patterns. Then eventually the market comes back down and tries to fill those down the road. But that's not where we're at. We've had a liftoff off an Iranian, did I slip there? Off of a Hamas event. I made a slip. All right, so the market coming up right through that. We have a pattern of a lower low and a higher high. Okay, this is where I think the resistance is going to be. As a chartist, you look to see where could resistance points come in. The 18-day average is a logical point because when you go up, you fall there and you fight battles. When you're under it and you finally rally back, you fight a battle. When you're over it, you come back, you fight a battle. It's very typical. So this is your battleground for the market. Now, if the market can create a pattern where it gets it down and up and all of a sudden gets over the 18-day average, could it get bullish? It certainly could. But do I think it's doing it right here? No. I think you're at the culmination of a leg of short covering after a huge break in the market. When we come over and we look at the Bollinger Band, you can see that you had number one extended here day after day under it, moved to the right-hand side and exhausted the decline. Number three, momentum, you lost the embedded reading. Now, I teach in my enhanced Bollinger Band course this. This is so darn important. Here you are with a market that's got the enhanced Bollinger Bands. It's rather slow stochastics. They're embedded. Still in the enhanced course. They're embedded. When this number closes over 21, unless it goes immediately back to it, the odds are super strong. I wish I could use the word all the time. It's not accurate. All right? It isn't all the time. It is certainly a monster amount of them. How do I know? I've been doing this, watching it year in, year out. I can show it to you on charts as we just go through them when it happens. All right? But I would be wrong in thinking it's going to be hit if before it's hit, you got to have an area where it's not going to work if you took out that low. That would be my due in. Otherwise, I think you're going to go up to that number. Let me come the right way. Here we are. And you tell me where you're at. You're knocking right there. Okay? In the silver gold, as long as this number stays over the 18-day average, I'll keep this all gold. When you close under the difference, I will then move and be a silver color because silver is getting stronger than gold. You're not there. In the silver market, you here also lost the embedded reading. Again, the enhanced Bollinger Band course is everything. To me, it's probably the most important tool I found next to swing lines. Swing lines, I was the happiest guy in the world when I created them because my son at that time, I think he was 13, maybe not even that. And I said to him, I can teach you how to go into any room, talk to guys, they'll bring out charts because everybody I knew was in trading, and you'll tell them what the trend is. He goes, sure. I said, watch. Guess what? You can teach your kids how to do it too. And I showed it to him and he went, oh my gosh. Because once you define what a trend is, higher highs, higher lows, or in a downtrend, lower highs, lower lows, you got your definition, uptrend, downtrend, and no trend won't have a sequence like that one way or the other. This is in an uptrend, but because it's under the 18-day average of closes in red, that's your objective. You lost the bearish embedded reading. You normally go there until you take out that number. Again, it doesn't have to, but you're going to be shocked if you take the course and learn it, be it on stocks, ETFs, this, you're going to go, whoa, what do you use that for? Not just to get there. It tells you you're not looking to be short. You're waiting for it to complete its move, and then you're looking for your new signals. It's a way not to deploy money and to take money off the table. I love it. In the copper, nothing. Just sort of drifting around. The market's, I think, hoping and praying that two things happen. China, number one, decides to go with what they're talking about. In front of what they call, it's a form of their monetary policy people. They come together at the end of the month. It appears that they're trying to set up about $130 billion that's going to be spent by the state, not the individual regions or the city councils, the state on infrastructure and other parts. The hurting of the market comes in because there's been no rescue for the private sector of the Evergrande and of the Country Garden. If they're allowed to fail, it's a domino effect. The private companies start falling over. China may just say, enough, let them fall, we'll pick up the pieces, and there's a way to get around that. I don't know what they're going to do, but that's why you're having trouble in that market right now. That's what I think, at least. In the platinum, you lost your embedded reading. Therefore, before this low is taken out, I'm looking for the market to get up here. And in the dollar, once you lost the embedded reading, let's walk ourselves, if I can, back to this number to prove my point again. You're embedded. If you lose the embedded reading, which you did here, but before you get over that high, I'm looking for price in the 18-day average to come together. I'm a happy guy, right? And yes, This has benefited me talking to my subscribers, my clients, and so on that are doing this. You're a viewer. You're not a subscriber of mine, and most of you aren't even clients. A number of you are. So I welcome that. But that is the beauty of what this all is. So how do you learn this? Because you can do it. I swear to you, in a weekend, you will have it. You take a look at what I've got here. It's called my Enhanced Bollinger Band course. You can go to iraepstein.com under the word education. You can move your cursor up here. An icon will appear if you're on a PC. Go there, take a look, take the course. You're going to get 2 weeks free of my access to what my paid subscribers see in the mornings, both Spider and ETF videos. You're going to get our charting software. And in addition, you will get all the videos that you need to complete it. You will complete it in a weekend. It's really simple. In fact, you'll get a review out of it in the weekend as well. And I think your eyes are going to go, whoa, why didn't I see that before? That's the idea. I'm Ira. I'll talk to you tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.